Hi guys, Gettess here with the Market Sense for the week of June 4th, 2013. As always, the charts I use come out of my Trade Navigator software. And a lot has happened since we talked last. Bonds have had a really hard breakdown. Of course, they were doing that last week, but they broke down even harder, and they seem to find support down here near the lower Keltner band, and they've had a very wide range so far this week, but it's merely a consolidation because it's well inside of the last week. And you can see it's in the same area of previous lows here and all the way back here. So as bad as this move down is, and it certainly is significant, it doesn't necessarily mean that they're going to continue lower. Also, the fact that they've held here so far and are starting to consolidate doesn't necessarily mean that they aren't going lower. We do have a slew of employment reports Wednesday, Thursday, Friday this week. Of course, Friday's the big one. And those certainly can be a drawing to pull the market in one direction or the other. So, unless you know what's in those reports, and you know what, if I knew what was in the reports, I still wouldn't know what the market was going to do for sure. What we are looking at here primarily is they have come up and they've held resistance here. This is, let's call this the 141 area. Because they've held that and seem to be trading lower, they are at the risk to break down. Support here is in the 138.24 area, and if they break that, well, see you later. They could also rally back up. The green line middle moving average here is 142.04 roughly, and getting up there wouldn't even take them above last week's high, so that's no big deal. Anything really is possible, including a move all the way back up here to almost 144. All of those things could happen. It's the week of the employment report. But there's really nothing telling us what is probable to happen here. The only thing that's probable is after this big move down, they should consolidate some. That's exactly what they're doing so far, and they really could do that for the whole week. I mean, we could find the employment reports being essentially a non-event. Now in stocks, we finally had a little break in stocks, and I emphasize a little break because I've been looking at this mid-Keltner channel and telling you that eventually they're going to break down that far, and you can see they've come nowhere near anything like that. The support that they're holding is the lower moving average here is roughly the 1628 area. They could also break down to the blue line here. Pivot lows is 1613. That's a possibility as well. And the best resistance is right here at the middle moving average at 1650. Really, this week has been rather calm. I mean, it probably hasn't felt that way to anybody who was trading it, but it's fairly calm, and also sort of consolidating what's happened in the last couple of weeks. I will say this, they had a big break down Friday and then somewhat of a recovery on Monday, and those 2 days had quite a bit more volume than what occurred on Tuesday. Tuesday was a much bigger range day, but not much volume, so that's a little scary. I would hope volume would pick up as we get through the major reports this week, and I can't rule out seeing them back up here in the 1675 area. I really think that's very possible. But having said that, I will remind you, they're going to go down and trade this middle Keltner channel at some point, and that's below 16 or 1565 at this point. So there's plenty of downside risk. I don't want to pretend that everything's just fine and dandy, but at this point, my guess is that the trend's still up and they'll probably have another bounce. So that's what we've got for you today. I hope you can find something profitable to get yourself into. Thanks for checking in to see how we're looking at things.